It's Joe Mazumdar from Exploration Insights at the Pre-PDAC Metals Investor Forum in Toronto, Canada. And with me, I've got Scott Williamson, CEO of Blackstone Minerals, an ASX-listed company that's looking at a nickel project with some PGMs in Vietnam. And so what is the story with nickel in Vietnam there, Scott?
Yeah, the story is, basically we started initially in Canada and we were looking at cobalt, and we built a very strong relationship with the South Korean battery end users. And these guys said, by the way, we're increasing nickel and we're reducing cobalt. So we looked around for nickel sulfide. They particularly said we want nickel sulfide. We learned our lesson back with the Ambatobe mine, which is a nickel laterite, which was a bit of a disaster. So they said, can you look for nickel sulfide? And so we found this mine on their doorstep, and very soon after we realised that the connection between South Korea and Vietnam has been there well before we arrived. Right. And so it's all focused on this lithium-ion battery industry. Yeah.
And so I mean, but LG Chem has come into Vietnam to actually build a battery plant with a Vietnamese billionaire. Is that right?
Yeah. So LG have a partnership with VinFast. VinFast is a local conglomerate looking to build electric vehicles, electric scooters, and they're looking to build a $2 billion battery plant. LG...
Right in Hanoi.
In Hanoi or Haiphong, where it's looking like it could be either way, but they're saying probably Haiphong, which is the port city near Hanoi. And LG have been in country for a good 20 years now. So Samsung and LG have electronics manufacturing all through this.
And the appeal of Vietnam is low labor costs and cheap power.
Exactly, yeah. So we've got the largest hydropower system in Southeast Asia in our province, in Son La. So we have very low power costs and some of the lowest labour costs, which makes for a great jurisdiction for downstream processing of nickel towards nickel sulfate and then into the battery.
But when they built or are planned on building the battery plant, they had no idea that Vietnam actually had any nickel.
No, that's right. So they actually went in there just because it's a great jurisdiction for manufacturing.
And with the idea of bringing in nickel concentrates.
Definitely. And so what we've now been able to do is say, well, by the way, there's one of the largest potentially nickel districts in Vietnam, similar to Norilsk and Jinchuan and Voisey's Bay. We have this magmatic nickel sulfide, which produces some of the biggest nickel mines in the world, completely underexplored and never really been tested geologically or with modern geophysics.
And for our audience, I mean, there's two different types of nickel. There's the nickel that's used in stainless steel, which we've seen a rise in that price because of the Indonesian limitations on actually exporting it. But then also we have nickel sulfides, which tends to be produced from these magmatic nickel deposits. But the nickel sulfate, which is a product, it tends to be better produced from the nickel sulfide rather than the nickel pig iron. Is that right?
Yeah. So the benefit of nickel sulfide is to get it into that nickel sulfate form.
Which trades at a premium
right now. Is at a premium, yeah. So it's a much simpler and less technical risk metallurgical process. So we're converting a concentrate of nickel sulfide into the sulfate through a pressure oxidation process, which is much more low technical risk and significantly low capex. So a nickel laterite needs a potentially up to $1 billion of capex. We're talking a tenth of that, so maybe $100 million to get it into that sulfate form. So that's the real benefit of nickel sulfide, is that you don't need $1 billion, and in our case, we only need around $100 million.
So in terms of what you're trying to do, I mean, feed the battery market, I mean, you're trying to actually, in Blackstone, try to get the whole chain at the mine, as well as right now, you're almost negotiating with the battery manufacturers, right? You've signed some memorandums of understanding.
So we have an MOU with EcoPro. That's the largest cathode producer in Korea and the second largest in the world. So the cathode is made up of nickel, cobalt, and manganese, or nickel, cobalt, aluminium. But the two key ingredients are the nickel and the cobalt. And they've said to us, by the way, we need the nickel, the cobalt we're reducing, so we're not as worried about cobalt as we used to be. But we've had that relationship ongoing for 2 years now.
And this is the change in the battery from the NMC 411 to now potentially going to an 811.
811, yeah, that's right. So it's the ratio 1 cobalt, 1 manganese. So they've said to us, can you bring us the nickel sulfide? And that was over 12 months ago now. So we've brought it to them on their doorstep. Now they're ready to help fund that downstream facility. So those negotiations are progressing very well. So what has started as an MOU will become something more formal, and then we can go and build together. So it's a long-term strategy focused on a 10 to 20 year potential mine that can deliver them the battery products that they need.
But right now, it's still a sort of quasi-exploration story. It was a mine when they were mining the thinner, massive sulfide nickel, but now you're looking for more of the disseminated deposit, and you've managed to find something that they hadn't drilled previously.
Yeah, so the reason we're focused on disseminated is because of the Korean battery end users. They need a long-term supply. And those smaller veins, although there's 25 of them throughout the belt, they are only going to be small 3 to 5 year mines. Right next to that 3 to 5 year mine that they've already mined is a very large disseminated body. We believe it could deliver initial 10 to 20 years of life. So what it is a much larger scale. It allows a long-term, supply into these end users. But because of that long-term supply, then they can help fund it. They're not going to help us fund a 3 to 5 year small high-grade vein. We will continue to look at those veins, and they will add better economics, potentially improve the economics by adding high-grade on top of the disseminated. But we believe the disseminated works without the high-grade.
And you're talking disseminated like they were doing high-grade underground, you're talking about open pit.
That's right. So we've got very low strip ratios, low labour costs, low power costs, so we can really drop those open pit mining costs right down, and we can mine down as low as 0.5% nickel, which is equivalent to some of the best nickel open pit nickel mines in Australia.
Okay, so right now, what are the catalysts any investor could look at for Blackstone?
Yeah, so we've just intercepted the King Cobra discovery, so we continue to chase that down at depth, and hopefully that could potentially uncover the source of the mineralisation or the feeder zone, which could be even higher grade at depth. So we'll continue to explore that. Maiden resource at the end of Q2, scoping study at early Q3, so good consistent news flow from the drill out of the discovery, but also moving this quickly into a maiden resource. I think the maiden resource will be the key catalyst for the market to go, yep, there's a significant amount of metals left behind. Then the scoping study to show the market that lowish grade disseminated
and your potential
works.
Partners as well.
And the partners. So we're feeding all this data in already. So they're seeing this unfold, and so they're ready. But the market will wake up to this in the next 3 to 6 months. We're happy that it's starting to sort of sink in, but eventually it's a much higher market cap than today.
Okay, so right now you're funded for all of these catalysts?
Yeah, so the King Cobra discovery has extended the drill out phase. So we've got another 2 months of drilling there. The scoping study is Q3. We may need to top up just before the scoping study. Nothing worse than coming out with a great announcement and the market says, oh, you'll come raise. So maybe in 3 to 6 months' time we might need to top up just to go into that catalyst with a bit of cash, just to really make sure that gets the excitement that it deserves. Okay,
and you're Australian listed. There's no intention of dual listing because you have enough liquidity here, or
got very good liquidity. I think we've also got other product or projects in our portfolio. We always consider going where the capital is. So if the TSX starts to open up, then maybe. But at the moment, we're getting great access to capital on the ASX, good liquidity. So at the moment, no, but we're always open to ideas.
Okay, all right. That's Scott Williamson, CEO of Blackstone Resources, BSX on the ASX. It's Joe Mazumdar, Exploration Insights, speaking to you from the Pre-PDAC Metals Investment Forum in Toronto, Canada. Thank you very much for watching.